Hello and welcome to FinTech Diary. The world of FinTech is changing constantly, and we at FinTech Diary try to map this change for you. My name is Amol Dethe, and my guest for this chapter is Bipin Singh from MobiKwik.
Thank you. Thanks, Amol. Glad to be here in FinTech Diary.
Superb. So, first of all, let me tell you something. I have been moderating shows for FinTech Diary. I interviewed more than 100 people. But very few people are actually, anchored the show in person, and that too in Delhi.
Okay.
So, so perhaps this is the first
Okay.
interview I'm doing in Gurgaon.
Okay. So I'm the lucky one.
We both are lucky. So from where you started
Yeah.
and where you are today,
Yeah.
how do you see it? Are you
Yeah.
very happy with the kind of growth that you see, and you are very confident that okay, now I will drive perhaps with a 200, speed? How's it?
See, the thing about business and thing about growth, both personal, professional, and business growth is that, the kind of excitement you believe should be there, once you get to a certain milestone, that is not there to the same extent because you think that now the next milestone, you think about what is that going to be. So when we started MobiKwik, I thought that if we ever get to 1 crore of revenue, that would be amazing, right? So we had very little expectations.
Yes.
But over the years, we built the business. I would say we have absorbed a lot of changes that have happened in this ecosystem, in the startup ecosystem, in the fintech ecosystem, regulatory ecosystem, market ecosystem. And here we are. I'm very proud that we are profitable. We are PAT positive. So no XX adjusted terms. It's actual PAT positive.
No star with the conditions.
No star with the conditions. And it has taken us obviously many years to get there. I think in the early phases of MobiKwik, we, like many other startups, were focused on growth, which we still are. But after a certain point, like especially around 2018-19, we figured out that, for this business, what do we want to do? Do we want to build this business to last for, let's say, 20, 30, 40, 50 years,
Right.
or maybe 100 years? If that is the intent, then this business can't be burning cash all the time. It has to become profitable in the real sense. And another thing is, one is it's not necessary to become profitable only in one quarter. It's important that you're sustainably profitable over a long term.
Right.
So we had to take certain steps to get there. The first thing was to actually become contribution margin positive. So for us, the biggest thing was revenue minus all variable costs, the cost of bank, cost of marketing, etc. At least let's make that a positive number, which it was a negative number a few years back. So we achieved that in 2019, actually, for the first time. And then we got it up to 20-25% of the revenue as a contribution margin. And we sustained that. Though we saw COVID and a lot of disruption because of that, it continued. And then next stage was covering your salaries, your fixed cost, your infra within that margin. So because we grew and our margins sustained, in fact, the margins itself grew, now we are at a stage where we've become profitable. So it is a process that has taken, I would say, last 3 to 4 years.
Right. So, in last couple of months, or maybe precisely in a bracket of a year, the whole profitable term has become so important for every fintech because most of the fintechs who got listed, were not profitable and market reacted to them very negatively. And that's why every shareholder, investors also looked at profitable as a term, quite diligently. And so when you're saying profitable, tell me on a softer note, did you throw a party when you became PAT positive? Did you like give cashbacks to your employees or something like that? Or you became more what you can say, more cautious? No, now I have enough money, I need to save it going ahead.
No, so we didn't throw a party, although we were all very excited and we had high fives on the floor, but we were not super excited because we knew it's going to happen, and we were building up for it, right? The last quarter was also very good, and the previous quarter. So, like I said, it has taken us several quarters and several years to get us. So it has not come as a surprise. It's not like suddenly we woke up one day and we became profitable. We knew we were going to get profitable, and now we know what we are going to do in the next few quarters. Hopefully, if we continue the same vein, I think profit is a very basic necessity of all fintech companies, of all financial companies. Now I think we've talked a lot about fintech, but it's still financial service companies. Either you're a service provider or a regulated entity, you're a bank or an NBFC or a payment company, whatever it is. You have a license or you serve a company who has a license. You need to be part of a sustainable ecosystem. That is the requirement of the market. That is the requirement of the regulator. That is the requirement of the ecosystem. So I think this focus on profitability should be there ideally for all startups. But in fintech, it's a very necessary feature, without which I think you can't build companies, right? Because you can't deal with money of consumers or merchants unless you can be sustainable for the next 10 years.
Right. So two things obviously about your business. One is the payment and then the BNPL, which I would like to learn more from you. But when we say profitable, which most of the fintech are struggling with, I would like you to explain more in terms of how did you become profitable? What exactly benchmarks, parameters did you set maybe in your whole key points which helped you become profitable, perhaps will be beneficial for the other fintechs?
Yeah. So firstly, I would like to actually throw a little bit more light on what is the business path we are pursuing and what is the vision we are pursuing. Because our business has gone through constant evolution over the last 10 years. We started off as a wallet company, as a larger payments company where we do UPI, consumer payments, merchant payments, everything. Then we started with credit. In credit, we started with buy now, pay later. Then we have done personal loans also in the last couple of years. We're just starting off with merchant loans, basically giving loans to small merchants in order to give them their working capital. And a lesser known vertical of MobiKwik is the wealth vertical, where we already had a platform where you could invest in mutual funds, in digital gold. And last year, we have started building a fixed income platform where we have introduced P2P, and we are going to introduce new products to make it as a place where you can go to invest if you're not investing in equities. So in a way, we're trying to build a digital bank. While I can't use the term bank because we are not a bank, but we believe that we are building a platform for digital banking for people who don't get the same quality of service, the price of service that they expect from their banks. And with the kind of public good infrastructure that has been created in India, where everything is unbundled and it's available using APIs, whether it is payments, whether it is identity using Aadhaar, whether it is now account aggregator, we're bringing all of those things together to build like a very seamless digital banking platform for 140 million consumers. And in that, payments was the first, BNPL was the second, then more credit, personal loan is the next, and then wealth is something that I'm supremely excited by.
Okay. But these are the businesses. Any talk points specifically on the profitability? Something maybe you reduce the cost, maybe you spent less on customer acquisition, something like that.
Yeah, the way this business has panned out is payments for all companies, payment companies, including ourselves, especially those who target consumers and get their app downloaded. Payments became more and more like an acquisition channel for customers, where it's very easy to acquire customers for UPI or wallet, or you just have to make bill payments or P2P payments or scan payments. But the margins in payments were always tight, which is the reason why we started with digital credit in the first place. We did a good job of running the payments business without burning a lot of cash, but then digital credit, because it got customers from payments and data from payments, we could invest in building data analytics and data science to understand these customers and underwrite these customers and give them access to credit in the form of buy now, pay later. And obviously the margins in these credit products are much higher. So when we talk about profitability, while our payments business is also profitable, our credit business is also profitable, but a significant new share of profit or growth of profit is coming from credit. And I think it's not very different from how the world of financial services works. I believe that banks, when they take deposits, they actually spend money, right? Because you have to give return back to the consumer. It's only when they give a loan that you make money. So that is the ultimate truism in financial services. And now with wealth we are looking to get into higher ticket products and higher engagement products, because payments has been purely more transactional.
Right.
Because customer comes in, does a transaction, gets out.
Okay.
But with wealth, I can keep the customer with me because I am getting the customer to invest in one of the products that we offer on the MobiKwik app.
On the lending side, BNPL became a very famous product in the industry. After the digital link guidelines of the RBI, perhaps the payments fintech companies operating in lending space and offering these products are going a little slow. But what made you confident, and what still makes you confident when you think about the BNPL? Because these are absolutely small ticket loans, and shelf life is also very little, and they are like specifically borrowed against a product, perhaps which will be used by the customers. Don't you worry that perhaps customers will not repay, perhaps will make losses? How do you look at the whole BNPL?
Yeah. I think there is a kind of misconception or slight misunderstanding in the understanding of BNPL. In India, the nature of BNPL is of two types. One is a kind of BNPL where you want to buy something premium or expensive, like an air conditioner or a refrigerator or something, and you want to get it financed. You want to pay it over EMIs, 3 months, 6 months, 12 months. That's really a loan. Right? It's a consumer loan.
Yes.
The kind of BNPL we do right now is very different. It's actually a payment product. It actually is an alternative to paying with UPI.
Okay.
Or to paying with your credit card. And as you know, most people in India don't have credit cards. Right? The number of people is maybe 50, 60 million, where 5, 6 crore people have credit cards. But 400, 500 million people have smartphones. And today, 25 to 30 crore people are doing payments using UPI and other payment methods. But they don't have access to credit.
Right.
And the kind of credit we are providing is simply kind of a cash flow credit. With small ticket sizes, let's say 5,000, 10,000, 20,000.
Exactly.
It almost works like a credit card, where you use it, you pay your bills on MobiKwik, you can shop online on any of the merchants that we've partnered with, like a Zomato or a Swiggy or a Make My Trip. You can buy train tickets, you can scan a QR code wherever MobiKwik QR is present. So effectively, we've created kind of a equivalent of a credit card for people who don't have a credit card. And that's a massive need in the market, right? We've gotten about 5 million people to start using this out of the payments base of 140 million. So we have a long way to go to offer this, because we're still understanding about credit, because as soon as you offer credit, it's risky. And I see that why I'm bullish about this is because, see, the risk in this is not customers overspending.
Right.
Because A, the ticket size is very small.
Yes.
Second is there are no EMIs. It's a one-time payment.
Okay.
Right? And third is customer is actually using it for their basic needs. So the likelihood of them defaulting, if somebody bought like an expensive bag, which they couldn't afford,
Yes.
but they bought it on EMIs, it's possible that they don't need it and they default and somebody takes away that particular product. But in this case, I'm providing a service. And a service that they want to use month of month. So we see very good quality, credit on this, and we see the opportunity to expand the market.
Right.
In terms of offering it to tens or hundreds of millions of people who today don't have any kind of a card.
Right. So meaningful thoughts here, specifically on the credit and the BNPL side. Explain me more on the payment side also, because that business has also become profitable. So how did you manage to crack that? Because there are MDR, there are challenges. UPI is already free, right? So how did you do that? How did you actually make it profitable? What strategy did you adopt there?
So how we make money in payments is basically through the merchants primarily, and in some places we charge convenience fee to the customers for certain kind of products where the customers prefer to use, let's say, a credit card instead of using a UPI, and in both of them, I think the market is really, really still untapped in terms of, let's say somebody pays bill payments, but at scale, even like if you make 10 rupees from a single bill payment, it adds up, right? When you do millions of transactions every day. Or if you use MobiKwik on a platform, then the merchant gives us MDR. Though those are numbers are small, they less than 2%, 1.5%, or even lower. But those numbers at large volumes make up for the profits. I think most importantly, I think it's important to reach network effects. So once you become a recognized brand in the payments domain, then you don't spend a lot of money on customer acquisition. I think that's one of the strengths that we got, that because we've been in the market and we've created credibility, so we don't have to do big bang advertising in order to attract more than 2.5 million customers in payments. And in payments, that actually makes for the biggest cost, right? Acquiring new customers. I think we've been fairly successful in running it at break even, although the margins are lower.
So currently, looking at your profitability, looking at a decent number of years in the business, and looking at your now pillars, which are kind of looking very strong, whether the payment or the credit or even wealth. What next? How far are you from the IPO? How far are you from maybe uh, expanding heavily?
So, like I said, I think we have a vision of building this platform for digital banking, where whether you want to pay, whether you need money, or whether you want to invest money to generate returns or save money, MobiKwik will offer you all the products on a single app in a seamless and a very structured way. So that vision, I think from a product point of view, from a business point of view, it's under works.
Right.
It's going to take maybe several quarters for us to do a lot of things that we want to do.
Right.
In the context of events like IPO, those are necessarily not under our control today, although we have a very strong intent that we will go public and the reason we want to go public is, I think, almost for example, the regulator, RBI, mandates every bank to go public, to list.
Yes.
What is the reason? The reason is because they want banks to be scrutinized at that level as public companies, listed companies, and have to be sustainable enterprises valued by a large, diversified base of shareholders. I believe that fintech companies at scale are no different. They have to act and behave in the same way if they have to build a business which is going to last next 10, 20, 30, 40 years.
Right. So let me focus on the industry now, Bipin. So majority of the players who are very, very confident about the whole fintech innovation are going a little slow now because the tap of free flowing money or the funds have, I won't say dried up, but the speed is very low. We do not know when the funding winter will completely be over or whether we will go back to the same situation. In this situation, how do you observe the whole fintech industry now? Because one, funding winter challenges are there. Second, the regulators are also very active. And third, now the focus of the fintechs are also becoming on the profitability and sustainability because investors have put a lot of filters there. So how do you see the whole fintech industry now?
If you ask me personally, I love it. And the reason I love it is because it enables us to build business in a proper way without distractions, right? Because when there is too much capital around,
Right.
free flowing capital around, and given to ABCD, right, may have a business model, may not have a business model. God knows what they're going to do with it, and we've seen that in the last several years. Not everybody is using that capital efficiently to build business in the right way. So I love it, and the fact that everybody is focused on building a good business, and those who are not will automatically get weeded away, right? Whether they are companies or entrepreneurs or anybody, if they are not going to do it in the right way, in the sustainable way, they will not last. And so, therefore, when you compete in the ecosystem, you do the right things. You do the right things for the customer. You don't focus on, distractions like cashbacks or discounts or too much advertising or too much burn, doing and trying to find out where to use the extra $100 million that you have lying in your bank. So it's good for everybody because everybody gets a chance to build a good business over the long term.
Okay, quite interesting. Uh, on the regulatory side, whether it's FLDG or digital lending, because that's where the fintechs realize that they can make more money the RBI is quite active there. Though you said that it's good, obviously it's progressive, and if compliance is there, you have to follow that.
Yep.
But in the short term, will it be very tough for fintechs in terms of complying, following the compliance, adopting to the risk mitigation methods which the regulators have imposed now, and perhaps the cost of compliance will go up? Do you think so?
I think the cost of compliance has already gone up. In my experience of the last 5 to 6 years, the pace of regulatory change and I would say in many cases disruption has meant that you're getting new regulatory changes every month or every quarter, right? And one way to look at it as a founder or as a CEO is to look at it, okay, one more thing to do. But the right way to look at it is understand the context within which this is being done. RBI is an extremely progressive regulator, but it's also a regulator which has to protect the consumers. And everything that they do is within that framework. And so it means you have to work harder to make your systems more scalable, more secure, protect the consumer, don't end up mistakenly doing wrong for the consumer.
Right.
And I think from that point of view, I think it's making every company stronger internally.
Right.
And when they become stronger internally, they will be more sustainable over the long term. And kind of the bad practices or malpractices around money, around financial services, they impact a lot of customers.
Right.
So that need to be stopped. Customer interest needs to be protected.
Right.
So I think I believe RBI is doing all the right things. At the same time, they're super progressive because if you see, they brought digital lending guidelines about 2 years back, the first draft.
Yes.
And from there till I would say a few months back when it was finally given out, now everybody understands what is their role.
Yes.
A bank knows what is their role in digital lending. Digital lending has become legitimized. In between, there was a period when there were questions being asked whether digital lending will survive, whether everybody should get an NBFC. Everybody can't and should not become an NBFC. It doesn't make sense. It's a different business where you raise capital, you get balance sheet, and it's a different kind of business, necessarily not suited for tech disruption, necessarily not for companies which raise money to disrupt and build new things. Like company like MobiKwik, they are more focused on using technology to improve the product and service delivery to customers. And in that, we don't have to make the main. We don't need to be the manufacturer. Right? We don't need to be the bank. We don't need to be the money provider. Right? So I think from that point of view, it's super progressive, and the roles of regulated entities, the role of lending service providers, etc., is all clarified. And MobiKwik is building a platform, which is using technology and our understanding of product to provide these products and services to the customers. In this process, we partner with everybody. Absolutely. So RBI has enabled that in the last 5 years. So I am super happy about it.
So obviously there are regulations which are helping also in terms of the innovations. But looking at the number of players, being part of the whole fintech space, we have a number of players in payment, lending. I see a huge competition now. And perhaps every alternative fintech is offering almost similar things, right? Perhaps A is offering what, B is also offering the similar thing. So my question to you, Bipin, is, or maybe if you could give a light here in terms of how the whole competition will shape up and how the competitive market will create, strong players, or perhaps it will maybe one is eating the B's pie share and the B is eating the C's pie share.
I think there will be different, the way I see it already. I mean, see, when you see from a very high level, yes, a lot of people are doing similar things. But actually, when you do a double click or a triple click, you find that even within digital lending, for example, there is one set of companies who are focused on very small ticket loans on, let's say, subprime borrowers, and another set of fintechs which are focused on longer tenure loans for more salaried and those kind of customers. And then there are other players like ours who bring the payment customers and give them buy now, pay later, and then consumer loans. I think they are very, very different. And the financial penetration in India is so low for all products, by the way, including payments. Right? Recently, there was a report about cash in circulation.
Yes.
It's at its all-time high.
Yes.
In spite of all the digital innovation that has happened. So the opportunity in front of us is not necessarily competing with each other only. I mean, we do that, but it's also expanding the market. So I see my job and MobiKwik's job is to bring digital banking to hundreds of millions of customers. We haven't done that. To bring them access to credit, to bring them access to good quality saving products, good quality investment products with predictable returns, higher returns than banks or FDI. So have we done any of that? The answer is no. And so therefore, I am actually super excited about fintech today more than when I started it.
Okay.
Because just the opportunity is so huge, and I would say the number of players given the opportunity is actually less.
One more point on the similar lines is, since you're super excited and in the market there are a lot of players on the block as well because of a lot of other issues. Perhaps many don't want to go for a compliance, many are unable to raise funds. So are you open to acquire any? And do you see the consolidation happening in this space?
I think consolidation is part of any system which practices capitalism, right? And it should be there because different players will do their different strengths. Somebody will be able to scale, some will not be able to scale, some will have other kind of issues, which we have seen in startups, not just in fintech. And in general, MobiKwik is open to buying companies, to basically doing M&A with companies, but we are very focused, right? We are focused on places where we can add something, either a team or a product, which we believe we don't have currently the capability to build, or it will take for us a long time to build. As long as it fits within our vision of building the digital banking platform for the 140 million customers, I think we are open to looking at it. I personally am very excited about a lot of wealth tech that is happening, because I think that's one area which is completely untapped in India. Like I was saying, I mean, there's lakhs of crores of money sitting today in banks, which is really depreciating, right? If you take inflation into account. So there is opportunity to make a difference in all areas, payments, lending, and wealth tech. And there are, interestingly, a lot of startups in this space. We keep talking to them. As and when we feel that there is an opportunity, we definitely explore it.
Okay, sure. And again, coming back to the last question, which we partly discussed, but if you could give more numbers to it, because that's always a good finance news, right? on the IPO front, what are the developments right now? I know it's going to be a big event for every company, and you will look at the right market and everything. But in what process it is? Have you already finalized the value? Have you already looked at how the market is? And also, if you could add in terms of what next, what exactly will happen in IPO? Will you unlock your values? Will the existing shareholder will unlock the values? How the whole plan is actually?
Yeah. I mean, see, we are not looking at IPO. Generally, a lot of investors and media looks at IPO as exit events, right? We are not looking at IPO as that. We are looking at IPO as a milestone that establishes us as a company, which is a publicly listed company, which can be trusted more than a private company, and has diversified shareholding, right? So that different shareholders, some shareholders will come in, new shareholders, some shareholders will go out. I and Upasna and the team, we are promoters, so we are here to stay to build the company. So I don't necessarily currently have a number split or a value split of what is going to be, because very, very hard. It's just subject to what the market is and when the market is ready. But one thing I can tell you is that a lot of the things that happened in 2021, the bull cycle of 2021, when both private and public, everything was super expensive and super high value. I don't think that is coming back again, for sure, right? I think companies are going to get valued on really what their long-term value creation is going to be. And as long as that is good, in my view, valuation is just a number at that point of time. But ultimately, that is not what we will optimize for. What we will optimize for is the quality of shareholders, the quality of the process, and basically doing it over the next 5 to 10 years.
Sure, Bipin. I think I'm done. Let's wrap up on that note. Wish you all the best whenever you come with an IPO, and congrats once again on the PAT news. Thanks so much for sharing your meaningful thoughts here.
Thank
It
you.
was
Thank
quite
you.
realistic.
Thanks, Amol. Great pleasure talking to you.
Thank you, and thank you for watching FinTech Diary only on etbfsi.com by the Economic Times. Thank you so much.